Robschild, nothing I say is investment advice. Welcome to the show where we view financial markets through crystal ball gazing. JP Morgan once said millionaires don't need astrologers, but billionaires do. And so we began. All eyes on Nvidia today. Yesterday I had mentioned that in the aftermarket hours we weren't even showing that we were breaking above this candle. So basically, and we shot way above it today. So this is a pretty easy one to read crystal ball wise. Basically, the people that are trading during market hours, it is smarter money because this is what they do. This is a retail move. These are the stupidest investors right now controlling this market, which is making me actually even more bearish. The higher this goes, the more that I think that it's going to collapse faster and harder, um, you know, because of the momentum that it's going to have when it finally does crash. My strong guess is that smart money is dumping into this rally here, and the stupid money is pouring into it, and so um, that's what I see here in my crystal ball and on my computer screen. If you looked at the other semiconductors too, SMCI was up something like 33% today, and AMD up 10%, and so the market's just getting really excited about the growth of the earnings of semiconductors as things are right now. And we're in a mania phase where, crypto and semiconductors are really driving everything higher and higher. So the music's still playing and hasn't stopped yet. The S&P 500 I mentioned yesterday, it looks to me like we are still stuck in this wedge, and I said very explicitly that I was bearish on the S&P 500. However, we broke above this wedge, and so from a technical standpoint, this is actually a very bullish technical chart. It looks like it can keep going up and up and up, and I don't care. I am happy to sit on my hands and wait for the speculation to end. This is getting ridiculous at this point. But not a bad time, I think, to be looking at hedging strategies and selling into this. I don't think that that's a terrible move. Again, no investment advice on this channel, purely entertainment. Again, slightly smarter money. This is the VIX. This is what people are betting on, how much fear there is. If when this is high, it means high fear. When this is low, it's low fear. So right now we're kind of coiling up. I see a bit of a flag pattern here. If this was a truly bullish market for everybody, this candle would be much more red, especially in light of the fact that the S&P 500 went up by over 2% today, which is that's a huge move up. The VIX is kind of saying like, okay, well, we could go either way from here. We're not super comfortable. If it keeps going up and up and up, the VIX will be forced to break down. But this is a game of musical chairs at this point, and it's getting dangerous in my opinion. We have high yield corporate. I wanted to bring up again. No reaction. High yield corporate. It doesn't see any more risk, and it doesn't see any less risk right now in markets. When you see a move up in the S&P 500, that's very stupid money compared to what's going on here too in the bond market. The bond market is just comfortably moving sideways here. They don't know what to make of it. They don't really. There's just nothing of that great of importance, I think, for them to react to at the moment. If we look at the economic calendar of data released today, we had initial jobless claims come out. This is the actual 201,000. Last month was 213, The expected was to go up to 216, but it's actually lower, and so that's, that gives more strength to the weight of the job market, which also obviously helped a little bit with this stock rally. But again, most of this is by the Nvidia, the mainstream media. This is starting to feel like kind of a mania phase, before like, the 1929, there was everyone was crazy excited about markets. They just kept going up, and they weren't, they were leveraged in sort of the way that there were corporations layering ownership of railroads, and um, it turned into a giant mess, obviously. And then, similar activity going on over and over again in lots of different markets, right? You can see that tons of times throughout history. We're entering that phase now. It's very clear in my crystal ball. It's crystal clear in my crystal ball here. Last two charts to bring up. This is the 10-year note yield. It's still looking bullish. I'm starting to see a trend line here that is giving it support. It looks to me like it's still going to go up, like I've been saying in other shows. I'm hoping for it to go up along with a 30-year similar structure here. My target is 4.7, 4.8, and at that point, I believe that that'll be a good opportunity to add to Treasury bond exposure, especially in the light of Nvidia and the stock market rallying right now. Because when it does crash and there is a run to safety, this yield will drop dramatically, and the value of Treasury bonds will go up dramatically, and that's where I want to be. I'll wait comfortably on my guaranteed return Treasury bonds with leverage from the duration, and that's my plan. So for this Thursday, February 22nd, 2024, thank you for watching. I hope you enjoyed. Robschild.